Last year around the same time, Mahindra & Mahindra Group made a long-term strategic investment for 7 to 10 years in RBL Bank by investing 400 crore in exchange of 3.5% stake, valuing the bank at market cap of 11,800 crore at price to book of around 1. Then Zero, the leading brokerage firm of India, has purchased 1.26% stake in the bank in December 22 quarter and continued to hold it since last 6 quarters. Recently, ace investor Mr. Matthew Sirek has purchased 2% stake in the bank. Not only that, Quant Small Cap Fund has aggressively increased stake in RBL Bank from 1.48% to 4.69%. And when I looked at the valuation and earning growth of RBL Bank, I found it very promising. In FY24, RBL Bank advances have grown at 20% CAGR rate, and within that, retail loan book has grown at 30% rate, and deposits have grown at 22% rate. And net profits have grown at 37%. So growth has been excellent. And when I looked at the valuation, RBL Bank is currently trading at price to book of 1.1 and price to earning of 13. Clearly the valuation looked quite attractive as compared to the growth rate. That really intrigued me to deep dive into RBL Bank business model and share my learning with you all. Hey everyone, my name is Sahil and this is my Personal Finance Academy. RBL Bank launched its IPO in 2016 at levels of around 225. Over the period, its share price touched highs of around 700, generating 3 times return in 3 years. However, over the next couple of years, RBL Bank share price tanked badly and fell down to below levels of 100. Fast forward today, its share price has recovered to levels of around 260, but still down around 65% from its peak. So in today's video, we'll discuss the journey of RBL Bank since its IPO, along with its fundamentals, including its business model, key strength, leadership, future growth potential, and financials. Then we'll look at company's valuation, and finally we'll discuss the key risk and growth thesis. But before we begin, a disclaimer that this video is only for education purpose. If you're looking for stock tips, kindly skip this video. And my channel is only for long-term fundamental investor, not for traders. With this, let's deep dive into RBL Bank business model. So RBL Bank started its primary market journey on 19th August 2016, where it raised 833 crore at price of around 225 rupee, valuing the bank at market cap around 8,300 crore. During that time, RBL Bank was growing at a very fast rate, with balance sheet growing at 56% CAGR between FY12 to 16, net interest income growing at 44% CAGR, and earnings at 46% CAGR. Despite such high growth, bank's asset quality was top-notch, with net NPA at 0.59%. During the IPO, RBL Bank was valued at price to book of 1.9 and price to earning of 16.7, which was quite attractive considering bank's exceptional growth rate and excellent asset quality. Hence, its IPO received a stellar response that got subscribed 70 times. It continued to grow its business and its share price zoomed at even faster rate, with share price touching highs of around 700 rupee by June 19, generating nearly 3 times return from its IPO price within 3 years. But then, the overall macroeconomic situation for banking and financial sector got very difficult. As a result, RBL Bank provisions increased significantly and its net profit tanked from 867 crore in FY19 to 506 crore in FY20. And then COVID further dented the asset quality and profitability. RBL Bank reported loss of 75 crore in FY22 with net NPA touching levels of 2% during the period. As a result, RBL Bank share price tanked around 90% from the highs. Eventually, situation started improving in RBL Bank. Profit zoomed from loss of 75 crore to 883 crore in FY23 and then 1168 crore in FY24. Bank's asset quality also improved significantly, with net NPA consistently falling from peak of 2% to current levels of 0.74%. As a result, RBL Bank share price has recovered to current levels of around 250-260. Although still down around 65% from its peak. I hope you got a fair idea of reason behind fall in RBL Bank share price. Now let us try to understand the bank's business breakup and growth plans. So if you look at the business model of any bank, it's very straightforward. Banks borrow money from the market that mainly include deposits from customer and give a fixed interest. Then they pass on that money as a loan at a higher interest rate. It includes loans like vehicle loan, home loan, personal loan, education loan, small and medium enterprise loan, microfinance loan, and so on. The biggest differentiator here is to understand the loan book breakup in terms of allocation between retail versus wholesale segment. Normally, retail banking is considered more safer because of very small loan ticket size to millions of customers. So even if a few set of customers default on payment, it does not drastically impact the bank's business. On the other hand, corporate loans are high ticket and any default from corporates can significantly dent the profitability. This is also one of the key parameters while valuing the bank. So this chart gives a clear idea of RBL Bank loan book breakup. In March 23, company's total advances stood at 70,200 crore. Out of this, 32,400 is wholesale loan and 37,700 crore is retail loan. Wholesale yield is 8.3%, whereas retail yield is quite high at 17.6%. If you look at quarter-on-quarter trend, retail book has grown to 49,147 crore in latest March 24 quarter with 30% growth, whereas wholesale book is sort of stagnant at 34,800 crore with around 7% growth. And that's the strategy of the bank. They want to increase retail loan book and reduce exposure in wholesale banking. As of today, retail to wholesale mix is 59 to 41, that is retail book is 59% and wholesale book is 41%. Within retail segment, the highest contribution is from credit card with nearly 34-35% of total loan book. This is the reason why RBL Bank retail loan yield is as high as 17.3% because it has higher exposure in unsecured loan including credit card, personal loan, microfinance. Although bank's secured loan book is also growing at fast rate. Housing loan has grown 39% year on year, rural vehicle and finance and gold loan have also grown at a fast rate, but it also because the base is very small. In my opinion, RBL Bank's higher exposure to unsecured retail lending is one of the reasons why the market is not giving it a higher premium. But eventually when the secured lending would increase, bank should see valuation re-rating. Now if you look at the deposit breakup in March 24, 64.8% is from term deposit, whereas current and saving, that is CASA, consists of 35.2% of total deposit. Bank has maintained an average CASA of around 35%. Although there is still scope to improve this CASA ratio. Bank's liquidity coverage ratio is well above RBI guidelines of 100%. Now if you look at the asset quality, bank's asset quality has consistently improved with net NPA falling from 1.1% to current levels of 0.74%. As far as profitability is concerned, bank's ROA, that is return on asset for Q4 of FY24 stood at 1.08% and ROE, that is return on equity, stood at 9.73%, which is certainly on the lower side and there is scope for improvement. Now this slide gives a clear idea of bank's distribution network. It has pan-India presence with highest branches in Maharashtra, followed with Karnataka and then Tamil Nadu. Now this slide gives a very good idea of bank's aspiration for FY26. Their target is to grow both advances and deposits at more than 20% CAGR and so far they are on track. They have set a retail loan book target of 60 to 65% versus current loan book of 59%. ROA and ROE, they are targeting 1.4 to 1.5% and 14 to 15% respectively. Currently they are below their target, so that needs to be improved. Customer count target is 26 million and currently it is 15.6 million. Touch points, they are targeting 2600 versus current levels of 1800. So this is the update on RBL Bank's business and financials. One last piece I want to discuss is bank's leadership because leadership is the most important part of the bank. So earlier RBL Bank MD was Vishwavir Ahuja, who led the bank between 2010 till 2022 and played a key role in bank's growth. However, there were multiple issues with bank's NPA and eventually he stepped down in 2022. Later, R. Subramania Kumar was appointed as RBL Bank Managing Director and CEO starting June 23. He is an industry veteran with 4 decades of experience in banking domain. He spent 35 years of his career with Punjab National Bank and also held the position of MD and CEO of Indian Overseas Bank for 5 years. And one of his key focus areas is to increase the retail lending segment and within that focus on increasing secured lending. Apart from the MD, RBL Bank has strong team of board of directors as well as senior leadership. As far as bank's valuation is concerned, it is currently trading at around 250-260 and command a market cap around 15,500 crore with a P ratio of around 13 and price to book of around 1.1. So in terms of valuation, RBL Bank has the most attractive valuation among the private banks. But that is also because it has higher exposure in unsecured retail book and has lower profitability. Going forward, everything will boil down to bank's execution under the new CEO. If they can achieve their FY26 target, RBL Bank should see valuation re-rating and it should regain its lost glory and generate good return for its shareholder. Now, if you look at the shareholding pattern, first of all, there is no individual promoter of RBL Bank. FIs hold 25% stake in the bank, and over the last few quarters, they have reduced their stake. DIs held 20% stake during June 21 quarter that kept on selling. However, from June 22 quarter, when situation improved, DIs have consistently increased stake from 11% to now at 20%. Now, you would be aware that recently Quant Group was under SEBI surveillance on front-running case. So, will it have any impact on RBL Bank share price? Well, I don't think so. In any case, if there's any negative impact in the short term, it will make RBL Bank valuation even more attractive. Public holding at one point was as high as 59.5%, but that has reduced to 50.4%. However, recently there's an increase in public holding, but one of the reasons is 2% stake buying by Matthew Sirek. Having said this, public holding is still high in RBL Bank, which is one of the risks. All the number of shareholders have reduced from highs of 5.37 lakh to now at 3.58 lakh. So in this video, we discuss the roller coaster journey of RBL Bank since its IPO, along with its business breakup, key financials, leadership profile, and guidance for FY26. After 3 times growth in share price post-IPO, RBL Bank has witnessed 90% correction in its share price and is now recovering from that shock. It is still down 65% from all-time high levels. But interestingly, many big firms have shown interest in RBL Bank. One of the reasons is bank's improved financial performance over the last couple of years and the reasonable valuation at price to book of just around 1. Yes, there are a few risks like higher exposure to unsecured lending, but RBL Bank is consistently improving its business mix with more focus towards secured retail lending. If RBL Bank can achieve its FY26 targets, it should see valuation re-rating. Now tell me in the comments, what do you think about RBL Bank? Is it worth considering at current levels? In case you want to associate with me closely, I have a weekly video series where I share one exclusive video every week that include discussion on promising businesses as well as my own investment thesis. You can get the details on my website or via the join button. I'll see you next video. Till then, take care.